All right. Hello, everyone. Welcome to your Monday market check-in here with myself, Greta Wall. I'm your host. I'm joined by Derrick Oldensmith, the head trader at T3 Trading Group and leader of T3 Live's Pro Desk virtual trading floor. Before we get into any market-related discussions, here's a quick disclosure of Derrick's current positions as of our recording here today on April 6th. Again, Derrick is the head trader at T3 Trading Group. Derrick, welcome back from vacation, but a little bit of work vacation because you can't get away from the market. Happy Monday. How's your day going so far?
Thanks. Going pretty well so far. A little bit of a slower day today, just with the European markets being closed and coming off of a holiday weekend. But yeah, I took a short vacation, and as I'm known for doing, it was right as the market went absolutely crazy. So I ended up dragging a laptop with me everywhere I went, which I'm really glad I did that because I was able to buy the bottom on Friday and Monday. I guess that was a week ago now. So that worked out. Help pay for the trip, I guess. Though it would have been nice to relax a little bit more.
All right. The title of our stream today is, headline driven market, and that is definitely what we are in. We are in a market that is very sensitive to headlines and any development, basically, with the war in Iran. So right now we're facing the 8 p.m. Eastern time deadline from the president to come to a ceasefire agreement, or else we'll see, what happens, if that changes or not, if that's still the deadline, if the day changes, et cetera, if the deal is reached, blah, blah, blah. Right now, the market is based on where we are, the market seems to be a little bit hopeful that a deal is coming. We'll see, how that goes. So when it comes to the action you've seen today, what is your read on the market's sentiment around the latest headlines?
Yes, so the market doesn't seem to care about this Tuesday 8 p.m. threat at all. We're small green and the market's moving very slow. On the one hand, it's very normal that as these types of geopolitical events go on over time, that the market reactions to newer news slow down. You can go back to Ukraine, Russia, that situation where when Russia first invaded Ukraine, there was a really, really big market move. We traded down like 8 days in a row into the invasion, then we traded up higher. And then over time, over the course of months, the market completely stopped caring about any new news updates on that war. The Iran situation is a little bit different because, one, the United States is a little bit more directly involved, and two, is because it is heavily moving around the price of oil, and moving around the price of oil impacts the economy, it impacts inflation. So there is certainly a reason for us to be moving more and more continuously on these headlines. But I think even with that, we're starting to see a little bit of a slowdown just in terms of how big the news reactions are. If this was a month ago and Trump came out with this Tuesday 8 p.m. deadline, we probably would be having really, really big moves on it. But now it's a little bit smaller. And also it's already we already have signals from the White House that Iran is trying to negotiate. So just based on that, I think it's a fair assumption that whatever we're planning on doing at 8 p.m. tomorrow is going to get postponed, and we're going to come out and say that Iran is trying to negotiate in good faith, and therefore we're going to postpone things. So that is my base case expectation. But the technicals of this market are the most important thing. And I do think that while, if the title of our chat today is a headline-driven environment, on the one hand, a headline-driven environment can be frustrating because you could be trading at any time recently, and a headline that could come out that could rip the market higher or lower, and there's not really any way to predict that. So you could have a great short position on, and then a positive headline comes out and we rip higher and you get stopped out, or the opposite. I personally always kind of think that that's a 50-50 situation. If you've got trades on and random news could come out, sometimes it'll move in your favor and pay you. Sometimes it'll move against you and stop you out. And if you're trading with a good risk reward, the reward profile when you get lucky and it moves in your favor should outweigh the risk profile of when a headline comes out and moves against you. But I also think that this entire situation has actually created a lot of trading opportunity. I have a chart of the SPYs up right now, Greta. I don't know if you want to do the screen share for everybody. Boom, there we go. So the market had gone sideways here for several months. The interesting thing, because I want to talk about fundamentals a little bit also. The interesting thing about this sideways market is that the market was moving sideways while earnings expectations were moving higher, which means that forward multiples were moving down. So even though the market was moving sideways here for these several months, the market was actually getting cheaper throughout that period of time. Then we broke down for technical reasons, for news reasons, because the price of oil was moving higher, because central banks around the world are potentially going to be tightening a little bit. So that created this then down move. But earnings expectations really have not declined even throughout the month of March. They've continued to stay pretty strong and pretty lofty. So really what this did was it compressed multiples even further. So the way that I trade, I'm definitely a technical trader, and right now I'm talking to you about fundamentals. I describe myself as like 85% focused on technical analysis. Within the realm of technical analysis, I also include what I call market dynamics, which is something I can speak to with the current market environment right now as well. But the other 15% I consider to be what I call qualitative fundamentals. I want to understand the story, how the story is evolving from a big macro perspective related to the indexes, but also an individual stock perspective if we're talking about the story with NVIDIA or Microsoft or Apple or whatever it is. So from a fundamental perspective, which is a backdrop, I think, to trading and technicals, this decline in the market just caused the market to get even cheaper on a multiple basis. And now I was just this morning, and this is after we've had a decent rally, looking at all of the forward PE ratios of the Mag 7 companies. And really, with the exception of Tesla, these are at the point where they have become extremely cheap. I mean, NVIDIA is trading at like a 15, 16 forward PE multiple. This is the company that's revolutionizing the world. And I understand, and I've been the first to point out for quite some time, the risks involved in AI revenue not fulfilling the CapEx, which could lead to a slowdown for NVIDIA over time. But at this point, we're talking about a company that's got a boatload of cash, has a huge buyback, has told us that they're going to ramp up their buyback in the second half of this year, and is trading at a 15, 16 multiple, cheaper than the S&P 500. It's kind of insane. So this has created massive multiple compression, and it's happening right at a time when, for me personally, I've always been saying that it's just a matter of time before we pull out of Iran and the price of oil comes back down. And I mean, we hit a point a week or so ago where the market was beginning to price in interest rate hikes. I am extremely confident that we're not going to get an interest rate hike this year. So all of this comes together, and for me, there is a buying opportunity. This is a fat pitch to get long. It's just a matter of timing that buying opportunity correctly. And that's really where the technical analysis comes into play. And then what we had at the bottom here on Friday and Monday, like a week ago, was just extreme downside extension in the marketplace. And that extreme downside technical extension is a signal for me to go the other direction. So I've got all of this kind of coming together at the same time. The forward multiples are getting cheap. I think that the outlook is overdone in terms of interest rates and oil. And this just led to an incredible buying opportunity. I will say that it wasn't necessarily an easy buying opportunity, because you had to basically take stock long with the market closing on lows, which is usually not what I preach for traders to do. I preach for traders to find intraday opportunities to enter positions, get a good open reward already on your trading, so you're already a lot in the money on your positions, and then swing them overnight because you're kind of playing with the house's money. It's a win-win situation. At that point, either the market gaps against you, moves against you, and you give back profits that you've already made, or it moves in your favor and you make significantly more. So I'm not going to say it was necessarily an easy execution to do, especially to do with a lot of size, but all of this was coming together where it was just a matter of when is the buying opportunity coming. Now we got this great bounce back that's come into the market. And then on Thursday, we had this beautiful potential higher low. So now the technicals are improving as well. They're starting to correspond with what I'm seeing from the fundamentals. I just need this market to confirm. How does it confirm? We need to really get above this like 658 to 663 zone for the SPYs. We get above there, the technical picture is improved. It will officially be a reversal. A downtrend is a pattern of lower highs and lower lows. An uptrend is a pattern of higher highs and higher lows. In order for a reversal to occur, you have to somehow go from lower highs and lower lows to higher highs and higher lows. Well, Thursday is a higher low. And if we're able to close really above Wednesday's high, technically that makes for a higher high. Personally, I want a little bit more confirmation. I want really above 663, but you're starting to get a reversal in the market as well. And finally, we're touching on all the points here. We're touching on fundamentals. We're touching on technicals. The final point that I would touch on is the market dynamics. The market dynamics, the systematic community sold a massive amount of, particularly the CTA trend following community, S&P into this down move. It's incredible to me, actually, that they sold as much as they did and we weren't lower. We got to, so CTAs are now net short, almost to the degree to which they were back in April of 2025. Almost, not quite, but almost. That's actually going to create for a massive buy dynamic in this market if this market is able to go higher. It's going to be a mini version of what we saw back in June, July, and August, where it didn't matter what the headline was, didn't matter what was happening. This market just continued to grind higher because there was a forced systematic bid underneath the marketplace. We're not at that point yet. It sounds like the real technical trigger on that is like 672, which is still pretty far away. But if we can continue to improve these technicals and more buyers come in, there will actually be even more buyers found to be higher. So the trend is your friend, and we haven't fully reversed this trend yet. I need to respect that. But I'm like extremely bullish right now that this market is not only going to recover, but it's going to go into a nice uptrend, get back to all-time highs, probably make new all-time highs, barring any new insane event happening, which unfortunately is always on the table these days.
All right. Bullish Derrick to start April. I wanted to talk about, you and I didn't get to talk at the end of March last week, but we wrapped up March and started April. And, previously you and I have discussed that April tends to be a pretty strong month for the market with all of the dynamics happening behind the scenes. It definitely helps out the stock market. And so real quickly, just like take a review of March and how your own trading was in the month and how, expectations versus reality for you when it comes to March. And then what are your expectations for April? Have they changed since the last time you and I talked about this time in the year?
Yeah, I mean, March was a solid month for me. There are a lot of people, there's always people complaining and complaining very loudly, but there was a lot of people that were complaining, and I get it, back in December, January, February, because we're stuck in this range with a massive amount of dispersion. So especially if you're an index level trader, this was probably really difficult. But then a lot of people were complaining in March, and in March you had trend and you had direction. So like I thought that March was a month that created a lot of trading opportunity on both sides of the market. You had these consistent lower highs that you could be shorting versus. Every time we snapped back into the equilibrium zone, we failed and we made lower lows. These consistently great setups to short versus those highs. But because the market movements got so big, we also had 3 different periods of that extreme, maybe even 4 of that extreme downside extension that I'm talking about, where I like to come in on the other side. So this was very viable here on March 9th. This was very viable here on March 13th. Again, not easy because you had to keep stock over the weekend after we closed on lows. This was also very viable the same way on March 20th. And then finally, we just discussed on this Friday, Monday, the 27th to the 30th, very, very viable. I'm not going to say that the longs were easy because like I keep saying, it was like every Friday the market would be weak and you really had the tenacity. You had to have the tenacity to basically be buying into the close on a Friday ahead of a weekend, just saying, you know what, we're so extremely downside extended. I'm going to nibble some here. If we were to gap down further because something crazy happens over the weekend, I'm prepared to buy even more. My sizing is appropriate, but I need to get some stock here. That's not an easy execution, but it worked. So you had just great opportunities consistently on the short side and the long side to be able to capture the downtrend, but also the mean reversion trades of the extension consistently. And then you had a lot of opportunities on the individual stock level also, just moving with that, different pockets of relative strength and relative weakness, trading the software companies, trading the semiconductors, trading the memory names, but even trading like, energy, XLE, or trading USO, if you want it to be, I don't know, I can get the chart to come up, USO. Or trading USO gave some great opportunities as well. It's been a really solid trading vehicle also on both sides. So I think that March was actually a great trading month. And now I think that April is going to be pretty good as well for all the reasons I just laid out.
Sorry, I was muted. All right, so questions we're getting from the chat. Somebody asked, what do you say for Microsoft? Are you bullish for the next 3 months?
Microsoft is tricky. I'm long. I'm currently long Microsoft. The software names have been really hard. They've been really beaten up. So if you're going long Microsoft, you are to some degree, I think, taking a bet on the software complex on IGV. I am still a believer, and I've been saying this since the low that we had in February when things got really crazy, really since the low in the beginning of February, and then we made this new low, that they're kind of throwing the baby out with the bathwater when it comes to some of these software stocks. Some of them are absolutely going to get disrupted by AI, but others, you're getting a gift to be able to get great companies at great prices. And I do think that big picture, Microsoft is one of those. Technically, the trade has been very hard. It's been a really, really weak name. I do think that there is some degree of Microsoft trading as a proxy to OpenAI. So you have to, even though Microsoft is this massive, massive company in and of itself without OpenAI, with none of the AI companies, the major ones, really being public at this point, you're kind of maybe trading Microsoft a little bit based on OpenAI news. And OpenAI hasn't been going well. They've been clearly losing to Claude and losing to Anthropic and to some degree to Google. They've given up a lot of share. But this is still a great underlying business with everything else that they're doing. So I think that they got hit with a double whammy of them technically being the software company, but also OpenAI not doing as well. But this is another one. I looked up the forward PE multiple on Microsoft this morning, and I don't remember what it is off the top of my head, but I'm pretty sure, excuse me, I'm pretty sure that it was in the upper teens. This is Microsoft we're talking about. The business is phenomenal, and think about everything that they own. Like, I think people forget that Microsoft owns LinkedIn, right? They've got to play in the social media space. They've got to play in the video gaming space. They've got to play in obviously, Windows and Word and all their traditional businesses that everybody thinks of. They're in AI. Secretly, everyone just thinks Microsoft and OpenAI, but I can't remember the name of it. Microsoft's AI, the one that they have that's separate from OpenAI. I don't know if you know the name of it right off the top of my head. I'm blanking. But we just saw one of the executives of Microsoft just come out at the end of last week saying that that's firing on all cylinders and massively beating expectations. Copilot, there it is. Yeah. So I big picture like Microsoft. Technically, it's got a lot of work to do. I do like this higher low potential that came in from Thursday. So I said to the team in the morning meeting today that I think you could try to be long versus Thursday's low. I think it represents a difficult trade, maybe not a high probability trade, but a really good risk reward trade if it works. But this thing's got a lot of work to do. It's really got to get back above this like 181 area, which is like this previous support from February. It's also where the declining 21 EMA is. Start to really get above 381 to 385. And then this chart's going to start to improve. Then it's going to show that it's reversing. It's probably doing that with the market, and then it'll begin to look a lot better. So I don't hate the idea of trying to front run that by getting some long versus Thursday's low. I think it's a decent risk reward. But like I said, you got to respect the downtrend. It's a beaten up stock. Maybe there's some people that are stuck in it, and you easily could get pushed out of that trade. But I like the idea of being long Microsoft, and I am long Microsoft.
All right. In the chat, I'm going to get to your gold question in a second, but I want to stay on tech here for a little bit. So you talk about Microsoft, obviously. In all the Mag 7 companies in this recent, drawdown in the market have all been part of it, especially, with with tech stocks getting beaten down, especially as oil just went crazy. So when it comes to the Mag 7 companies, which one is your like best value on the current chart when you look at the big tech companies?
I really like Google. I really like Google, and I'm long Google. Google really didn't go down at all when everything else went down, when the NASDAQ went down.
It didn't, yeah.
So incredible relative strength.
It's not the Microsoft chart.
No, it's It's completely different than Meta looks like, than Microsoft looks like. Apple's maybe somewhere in the middle of those. Different than what Amazon looks like, though I like Amazon also. Google has shown itself as the real leader in terms of relative strength. It's also super cheap on a forward PE multiple basis. I also don't remember the number specifically off the top of my head.
Microsoft's, by the way, is 19.58 today.
I think that they're all under 20 except for Apple, which is around 27, and Tesla. But Tesla is stupid. It's in a world of its own. It's like 183 forward PE multiple on a business that hardly exists. But
Google's is 26.
Is Google up to 26 now? Okay, I thought it was less than that. But still, held in best. They're consistently taking market share from OpenAI, like we just discussed. So they are starting to emerge as one of the absolute leaders in the space. I see a forward PE of 22, a PE of 27, and a forward PE of 22 for Google. So forward PE of 22 for Google, I still think is very cheap. And I think that's less than the S&P, or approximately equal to where the S&P is. But this is a growth company that's got a massive buyback that's ongoing, and the chart looks great. Had a little bit of a breakdown of support on the last leg of the market sell-off, but it's recaptured that. It's holding in really well. I want to see this really get above 300, and then 310 is the big level. But yeah, I got back long Microsoft this morning, actually. This is one that I had been long kind of in this area. I got out into this pop into 310. I was not involved in this pullback. I did not buy the bottom on this one either. But this is one that I actually added to here on the way up, even though I know I'm kind of cheating or front running on the market break higher as well.
All right. Somebody wants to know your thoughts about gold.
Sure. So gold and silver are tricky. I am not a big picture bull on the metals anymore. I had been, especially after the initial pullback occurred and we were kind of building out this wedge. But I was shorting the metals into this parabolic move. And one of the things I remember really reading into this parabolic move is that more gold and silver were going to be coming online just because the price is higher. So I remember speaking to a really, really good commodities trader with a ton of experience. I'm not going to mention his name. I don't know, maybe a year or two ago now. And I've never really been a commodities trader. I'm really more of an equity trader. But he said one thing that really stood out to me as a very simple sentence, which is that commodities just tend to be mean reverting. And when you think about it logically, I always want to, not just take what someone says to me and have it become my trading Bible. I want to apply logic onto, well, why did this excellent experienced commodities trader say that to me? Well, when you think about commodities like gold and silver and really any commodity on why they may be mean reverting is very simple. As prices go higher, you're going to produce more of it. It's a simple supply and demand situation. The thing about a lot of commodities is it just takes time for them to come online. But I remember, again, reading into the parabolic move with gold and especially with silver, how at this price in silver, whatever it was trading at when SLV was at $100, you can have like a lot of silver mines come online and be profitable at that price of silver, where they would not be profitable at a lower price. Or I remember reading that a lot of like silver, I think the word is smelting, like where they just take silver and melt it together and make new products out of it, that is or can be an expensive process. It takes a lot of energy inputs in order to do that. I think in the United States, there's only one silver processing center in the whole country that does that. There's more in Europe, but Europe was suffering from high natural gas prices that were negatively impacting their ability to be able to do that type of business. But at that higher price of silver, they can implement that business. You're going to build factories in the United States that are going to be participating in doing that. So as the price of silver and gold go higher and stay higher, you get more supply that's going to come online. Is the demand going to stay strong enough to absorb all of that? And the answer is maybe, but probably not to the degree that it's going to continue to move higher, like with what we saw in November, December, January. So for silver and gold now, I like them as strategic trading vehicles, but not for bigger picture plays. So I had been getting long against silver and gold on like March 19th. I'm pretty sure I was buying both of this stuff just because we had 6 down days in a row followed by a really big gap down. So there was a lot of downside extension. That was a trade. That was an extension trading opportunity. I am willing to take trades like that in silver and gold. I was involved in both of them, gold for the snapback here as well. But I'm not willing to be involved in these as bigger picture trades or bigger picture plays at this point.
All right. All right. It is 1 o'clock, so I'm going to let you go. Derrick is a real trader, so I do want to let him get back to that. Again, he's the head trader at T3 Trading Group. So if you liked any of what you heard here today and you're interested in working with Derrick and the team, you can go to t3live.com/DOLive, fill out the form there, and someone will be in contact with you. Again, Derrick is the head trader at T3 Trading Group. Everyone who works with T3 Trading Group works with Derrick on his ProDesk virtual trading floor, day in and day out. That's where you get more of his trading insights and all of it during the day, every single trading day. Derrick, have a great rest of your day, good week. We'll see how the Tuesday 8 p.m. deadline goes for the market tomorrow.
Thanks, Greta. See you next time.
I'm good.